And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Wednesday, August the 25th. Wednesday, one of my favorite days of the week. We get to do group coaching today. I'll put the link in so you can register for group coaching. That's at 1 o'clock p.m. Central today. Who am I? I'm John Hoagland. Thanks for trusting me with your time as always. We're looking for accurate context, good risk management, and infinite patience in trading. This morning, the durable goods orders came out at 7:30, beating expectations by a little bit, even with a upside revision from the last release. We're still waiting for the 9:30 EIA petroleum status report for you crude traders. We got crude kind of, holding upside, doing pretty well as far as the upside is concerned. We're maybe coming pretty close to a test of an important inflection level in coming days or even hours. But as usual, just kind of glancing over the news this morning. I like to do that, of course. We got to know what's going on. Goldman has said that they're expecting tapering to come sooner than later. Odds are increasing for a November announcement. Of course, we're all going to be watching on Thursday and Friday for any news of that information coming from the Jackson Hole Symposium. The U.S. House has approved the $3.5 trillion spending plan, but it still faces some pretty deep difficulties getting through Congress. U.S. equity futures holding steady in early trade after the numbers came out, and crude prices hold gains after the API announced a smaller than expected drop in crude inventories at 1.6 million barrels and a drop in 1 million barrels in gasoline. We're going to have to see what happens with the EIA. I think they've trimmed their number just a little bit after last night, but we're going to take a look at that while we're looking at the charts. Make sure that you like, share, comment, question, feedback, heckling, and those are all welcome here. Make sure you subscribe to our YouTube channel so you can get notifications when we do when we do go live. A brief look at the VIX, the dollar index, and the 10-year yield. VIX 1736, up slightly from the close last night. Dollar index still holding above 93 at 93.13, and the 10-year yield up today at 1.29%. As always, I'd like to look and say hello to everybody. First in the room is Dustin P. You win the prize, Dustin. We're going to take a look at that gap in gold here shortly. Tanya, good morning. Charles Ednelson, good morning. George. Brett. Jim, Drew, good morning. Stacking bananas. I like the gorilla there. Hopefully you're going to stack some bananas today. Bill Phillips, good morning. Brian, Ryan, George, Caesar, Januz, Laura, good morning. James, Jason, Vince, good morning, my good friend. Rob T, David, how do I take a partial profit on MT4? I think you just have to adjust your number of contracts or the size of your trade. You can also trade against it with a smaller trade size. Tone, good morning. Trading Research. Nelson, NM. Sup, John? How was your 5-mile run this morning? Well, somebody watched the the coach's playbook yesterday. I didn't quite make it 5 miles this morning, trading research. Good morning. Not a fan of the noisy intro commercial. I get top step ads constantly on YouTube as it is after belonging for months. Doesn't matter if I clear my browser either. Well, thanks for the feedback on that noisy intro commercial. Maybe we can find a way to lower the volume on it a little bit. Maybe something like that would be all right. But again, we do appreciate all feedback, positive and constructive criticism, of course. Ricardo, good to see you this morning. David O, good morning. NM, I only just got the notification. It seems to be delayed 3 to 5 minutes. Yeah, I think there's some sort of a thing going on with YouTube. We've been noticing ourselves that the notifications have been coming a little bit late. Dr. VJ, dead letter opener, good day. Nice to see everybody. Here is the link for group coaching today. Plenty of space. We got some really good questions from our good friend, our good friend Fred Decker has got some good questions for us. We've got a couple other questions already emailed in. I do answer the questions that are emailed in first. So if you do have a question, you want to make sure we get to it, make sure you email it in. Give me some time to prepare maybe. But of course, on the fly, questions are always answered. I don't know everything. Nobody does. If there's something I can't answer, something I don't know, I'm going to tell you. It's one of the reasons I love it so much is because I learn as much as you do. All right. Deanna, better than a count down, I reckon. Deanna, good morning. PD, first world prop, but agree with trading research. Just feedback, exactly. Okay, yes, I do want that. Yes, I do want that feedback. Thank you very much, trading research. All right, drones over Texas. Good morning. Good to see everybody here today. All right, so on that note, we are going to jump into the charts and see what we are looking at this morning. My charts are set up here the right way so that we're starting on the right spot. As always, starting with the daily in crude oil. No particular order. Everybody knows the rules. Just because it's the furthest on the left. Let's take a look. All right, so we have had a pretty good run up since last May when it dropped down to negative $40. But here we are. We've had a pretty good up move. Okay, $75. Really the most recent high level. We've been pulling back. We've had lower highs, lower lows. We're at risk of changing this medium time frame market state as we continue to move closer and closer to this weekly kickoff high, which is 68.60. As we've been getting closer and as rollover has allowed us a clearer vision of volume and open interest, we start to see that we are kind of cutting off volume as we get closer and closer to that level. We've had lower open interest every day since the beginning of October. Is that still a function of rollover, or is that something that's telling us that this auction is tiring? I mean, since the beginning of August, we're looking at back here. So we've been losing open interest this whole time. Pretty decent volume off the low here, but still the most recent biggest volume is, of course, on, switch day. And that was a down day. So we are looking at information due out this afternoon. Well, this morning, I should say. We're looking for, the API announcement was a shallower cut in inventories at 1.6, down 1.6 million barrels. The EIA forecast is looking for deeper than that, a deeper reduction in inventory, minus 2.6 million barrels. Got to keep an eye on the gasoline too. That tends to throw a horseshoe into what the crude oil number is telling us. I'm going to probably be trying to remain patient here before the EIA. We've got last week's high in play. We may have weekly kickoff high in play at some point today. Looking at the 30-minute chart here. All right. So we have possibly accumulated some overnight longs, perhaps some weaker hands longs, as we've opened with a gap, and our initial move is to go close that gap. It has not successfully done that yet. Remember, gap rules. If we can't close the gap relatively early, we look for opportunities in the direction of the gap, which would have us looking towards possibly that test of weekly kickoff high that we're looking for. The last week's high is certainly in play right now. We're trading right at it. Opening range appears to be the high of the regular trading hour session. So, I'm going to be looking to the short side because of that, but I'll be also monitoring to see if this gap doesn't get closed. We did not close the gap to yesterday's regular trading hour session, and that may be indicative of a weakness in sellers. Maybe the overnight inventory wasn't enough inventory to push price back to close the gap. So, this looks like an interesting area where we may find some fish. If this doesn't work, we've got a naked point of control here, which was already checked yesterday. We're going to remove that. We've got the high of the range, value high, and settlement and point of control just inside the gap close. So this might be an interesting area where I would probably be looking for fish. But again, if we can't close this gap relatively early, that's telling us something. Remember, what doesn't happen is as equal and sometimes as important as what does happen. The inability to close the gap early this morning may indicate that these sellers are shorter hands and that longer hands may take over and continue this move to the upside. Remember, a lot of the questions of why this market started heading to the downside were demand questions. Lots of, new infections of COVID. All this was kind of thinking, all right, well, if we're going to go back into hibernation, we're not going to need a lot of gas. Well, some of that threat has been somewhat relieved, I would hope, and that would be a good sign. So the question of demand has been kind of falling off. So it's going to be a tough day. If that opening range is the high of the session, it's going to be hard for me to be patient and look for the right spot to look for longs if we do close the gap. If we do close the gap and we accept in value from yesterday, that's going to tell me, hey, if we're accepting value, there's a good chance that we're going to trade to the other extreme of value from yesterday, which would put us down here right around 67.07, 67.05. And that would be an interesting spot for an execution. So be monitoring to see if we can close this gap. If we can close this gap, and if we do find acceptance inside value, it makes our opportunity for longs a little bit lower. Again, back down here near 67.05. All right. E-mini S&Ps. Finally, we got to close above the weekly kickoff high yesterday. It's kind of hard to see. We've got last week's high very close to the weekly kickoff high, which we are showing signs of acceptance above. Remember, when we're looking for acceptance of price, time monitors that acceptance. If we're spending time above a level, that means price is being accepted above that level. We didn't have any bad news as far as the durable goods this morning, so we seem to be merry and happy along our way to the upside, perhaps. Yes, breathe in, breathe out. Yes. Volume was a lot lower yesterday. It wasn't that bad in New York. We added 8,400 in open interest, so there's still money coming in to the upside in this market. When we start to see volume falling off and open interest falling, that's a little bit of a warning sign. So we're seeing money coming in to the upside yesterday, largely an inside extended trading hour range for us today. We are awaiting data. Durable goods is out. GDP preliminary is tomorrow. Jackson Hole Thursday and Friday. The market's waiting for a lot of information, and there's likely to be some posturing and some hedging going on over the next couple of days while we wait for this information. Our all-time high remains now in the extended trading hour session. Take a look at this market in the 30-minute chart. I call this walking a tightrope. Since, just after the close on Monday, we've had a very small range. We've been very magnetic towards the weekly kickoff high. We got our first close above it yesterday. The majority of the time for the last couple of sessions has been holding above that level, but we're not finding any directional activity here, even though we did add 8,400 in open interest on yesterday's session. And I keep telling myself, okay, we're spending more time up above this important inflection level, which says we're accepting price above that level, but we're not seeing any momentum. We're not seeing good volume. So there's a lot of questions here. And again, I think we're walking this tightrope because we are waiting for information. There's no overnight inventory. There's no gaps. There's no runs, no hits, no errors, nobody left. We're in the middle of the range in the value area from yesterday. I'm going to suggest trying to stay patient and wait for opportunities as the day comes along. There's lots of visual targets and in very close quarters here, if you will. We got the value high from yesterday. We got our all-time high, which was 2 nights ago. That's a visual that's not likely to stay there for very long. We've been chasing overnight all-time highs all the way up. What's going to change that now? But again, because we're right here in range on kind of walking that tightrope with information due out over the next 3 days, I'm going to be patient. Patience, patience, patience. I don't see any reason to jump into anything really quickly here in the E-mini S&Ps. Now that I've said that, watch the opening range provide a wonderful big opportunity in some direction today. The opening range, first minute of trade, breaking out outside that opening range can sometimes be indicative of buyer or seller control right off the opening. On to the Nasdaq now. Nasdaq has had a pretty decent move and is holding much higher above the weekly kickoff level. We are seeing, better directional activity, but are we seeing good volume? No. Did we add a whole bunch of open interest yesterday? No, we lost open interest yesterday. Some of the money started coming out of this upside move yesterday. Again, it doesn't mean that the rally is over. It's all part of the equation as to what direction is the market attempting to go and how good of a job is it doing getting there. Okay, well, we got some momentum on Monday. Tuesday we just kind of hung around. Today we're just kind of hanging around. The market is as well as the S&Ps awaiting new information. Here's the weekly kickoff level here. We broke out above it Monday, had a pretty decent move, looking more like a short covering move than having real money coming into the marketplace. We lost open interest yesterday of 3,000. Again, an indication of money not coming into this marketplace. Well, if it's not coming into this marketplace, maybe it's going to soon. We're still sort of, in a way, we're walking the tightrope. We're inside yesterday's range and value with no overnight inventory, no real reason to be in any big hurry to get into anything today. Again, no runs, no hits, no errors, nobody left. Inside range, inside value. Stay patient. No overnight inventory. It's going to be a hard day to, I think, try and stay patient, find the right opportunity. And if the right opportunity goes by, don't worry about it. There will be another opportunity coming. But again, I'm looking for these markets to really sort of settle in with no new news and wait for the GDP preliminary tomorrow, and as well as information coming from Wyoming over the next couple of sessions tomorrow and Friday. We do have Chairman Powell scheduled to speak on Friday at 9 a.m. Central from Jackson Hole. So maybe some information coming from him at that point. Gold. Fascinating gold. Okay, so where are we now? So we've been wrestling with that at 1807 to 1809 level for 2 sessions now. We're at 1805.30, which is our overnight high. It seems as though we are rejecting that level at this time. We have our winners selling up at that level so far, but we had lower volume yesterday. We only added 400 in open interest, so that's largely moot. Our short time frame upside auction seems to be struggling because it's cutting off volume and not bringing in open interest. So we look to the opposite direction, at least for now. Oh, wait a minute, one thing. This trend line is going to be relatively important, if not today, then tomorrow, especially if we are continuing to work around that weekly kickoff high. When we have a divergence in the weekly kickoff high and a trend line of this magnitude, I think this is a pretty solid, good trend line. We've got one a little bit through it here, but 2, 3 really good points of contact. And as tomorrow comes into play, that is the day when they are going to converge. And sometimes we see some pretty important big opportunities on those days. So taking a look back to the 30-minute chart, again, we've got settlements all the way up here, 1808.50. Okay, we settled above that weekly kickoff level, but we've been selling off ever since. This move to the downside is more likely shorter, weaker hands traders than it is longer time frame traders. So we know we've got a pool of short time frame traders who are holding those shorts. They're looking for help from the extended trading hours traders to help push this move, maybe even just back to close the gap that was left over the weekend. Monday, Tuesday, Wednesday. Monday, Tuesday, Wednesday. So yeah, this was a weekend gap. And, the market trading to it, there's still, more information that can be kind of repaired down here. But again, because we are so short in the overnight, we're seeing at least some degree of overnight inventory adjustment. We are holding a gap. And again, gap rules do play here. If we can't close this gap at some point in the session, earlier in the session, hopefully, then we look for a continuation to the downside, which would be probably a welcome thing to clean up some weaker structure below the marketplace and to see this market continue to move higher, but we got to see what happens. Opening range was neither the high nor the low in gold this morning, just FYI. Okay, the euro, we have the weekly kickoff high at 117.40. We are still wrestling with that level. There's a whole lot of digestion going on at important inflection levels, probably because of the data due out tomorrow and the information from Wyoming. We got a potential breakout failure. We did close a couple of days, or at least close to a couple of days above this important inflection level. This trend line, similar to gold, would be a second break of that potential market state break. We can look at this market and see it's been putting in lower highs for quite a while. This is a downtrend. And this is a step one break. This trend line would be a stage two break for a move or a market state change from downside to ranging or to the upside. So, I'm getting a little long-winded here. So we are still kind of dancing around this important inflection level. Lost 400 in open interest yesterday on lower volume. Not an impressive breakout above that trend line by any standards. Weekly kickoff high still somewhat pivotal. We've got a little bit of structure down below that we can go check. We've got a gap that remains here with a naked point of control right through the middle of that gap, and then we've got another naked point of control down below that. So, while we're waiting for some sort of directional move away from this market, be careful not to get chopped up. At some point, this level should become repellent, while now it is magnetic. So if we're looking short below and long above, we may get short below and long above and short below and long above too many times to make it worth your while. So be patient. We do have a little area of repair down below. The market has, opened, returned back to range from yesterday. It did open outside of range and value. So if we do find ourselves reaccepting inside of value yesterday, and this isn't necessarily a good trade because it's not all that big, but if we reaccept inside value, it could bring us to the other extreme of value at some point during the day. If that's a good trade, if that seems big enough, if you can limit the risk and get a 2-to-1 on that, why not? And the 10-year. So the 10-year has been really largely range bound. We are testing weekly kickoff low. We've had a little bit of a spike in rates. So that's kind of telling us that's where this test of weekly kickoff low is coming from. We had a 95,000 contract boost in open interest yesterday on a little bit of higher volume to come and test this level. That higher volume and open interest increase on a down move should be relatively encouraging for shorts. And I think overnight and at the early session, we've had a pretty good overlapping to lower range. 30-minute chart. So while we weren't looking for much of anything yesterday, rates had a little bit of a boost yesterday. So of course we have bond pricing looking lower, settled at pretty much the low of the day. Settlement is 133.31 and a half ticks. We've got last week range and weekly kickoff range in play right now. If we cannot accept below this level, I can look for the market to come back into value from yesterday, and upon acceptance of value from yesterday, a move back up to the high of value from yesterday. So we got a couple of value area special situation plays that could play out for us today. Again, acceptance inside of value is subjective. We've taken a one move look up into value from yesterday. This does not mark acceptance. It's acceptance through time, volume, or even momentum. Sometimes these plays play out so quickly we miss them. All right. Yes, opening range in crude 68.06 to 68.20 has been left at the high of the day so far. Thank you, Fred, for letting us know. All right. We are a little long-winded. We are looking forward to seeing everybody at group coaching today at 1 p.m. Central. Maybe the markets will be a little bit slower then. We can spend a little time together. And let's take our deep breath. Got 1 minute before the equity open. Stay humble, grateful, and creative today. See you at group coaching at 1 p.m. Central today. I will be joining you for the recap as well today. Dan's got a little work to do. He's going to be busy today and tomorrow, so I'll see you all on the recap as well. Get out there and profit today. Trade well. I will see you in the pits. We'll see you later. Bye.